All right, ladies and gentlemen, welcome in. It is Friday. Hey, trader nerds, how you doing? And keep in mind that the markets are where we are all equal. It really is. The market is there to spit you up and take your money. The markets do not care if you are fat or thin or black or white or yellow or red or queer or straight or lesbian or Lebesian or bi or tri or qui or quinti. It doesn't care. Doesn't care if you're trans or you're hetero or you're homeo or you're whatever. It really doesn't care. Doesn't care if you're short, tall, smart, dumb, rich, or poor. If you engage in the markets, it does not care. You can't say, oh, I got ripped because I'm fat. No. Little Mr. Market doesn't care. Doesn't even know. Doesn't know your race, doesn't know your country of origin, doesn't know your pronouns. It doesn't know any of that stuff. So if you think you're getting a raw deal in the world, then you need to become a trader, baby, because you will get treated exactly like every other person in the planet Earth that engages in the markets. There is no sympathy towards you. There is no pity towards you. There is no treating you differently than anybody else. Get yourself a trading plan, get you a trading account, and hop on in, baby. If you're being discriminated against by anybody on planet Earth, baby, then you need to stop that position and stop that job and go into the markets. So we don't care what you look like. Isn't that cool? We don't care if you pretty, if you ugly, if you got hair, if you don't have hair, if you got hairy ears, or you don't have hairy ears, or you got a hairy belly button, or you don't have a hairy belly button. It really doesn't matter. That's what we love about the markets. The markets are where we all are equal. But at the same time, not everybody makes money in the market, and it ain't cause of your sex or your orientation or your height or eye color. It has nothing to do with it. It has to do with the skills that you have. It has to do with how you manage risk. What is your appetite for risk? How do you handle it? How do you manage risk? How do you manage money? What's your how do you manage your portfolio? That's what it boils down to. So we here at Trader Nerds don't care what you look like, right? We don't care anything about you other than we want you to be successful. We really, really do, because a lot of people are not. And I know what's happened with most of you. You spent dollar and dollar with everybody and their mama training you and helping you, and you ain't been helped a dime because you that same old miserable loser that you've been throughout your trading career. Well, welcome to a new frontier, baby. We may not always be the most successful, but we are the most open. We will tell you like it is. We will show you the good, the bad, the ugly, the silly that we trade in this market. Now, with that in mind, y'all coming in, I know how y'all doing. We got this new management theory, and I know the first thing that's going through some of y'all's head, because this is what goes through my head. And your tendency, ladies and gentlemen, why? Because I know y'all's tendency is going to be, get them dogs out of my house. Your tendency is going to be, get off that. Oh, your tendency is going to be, you ready to this? Your tendency is going to be to complicate the simple. The simple. Complicate the simple. It's really simple. I've been noticing our president is tweeting. Well, he's not really tweeting, but someone is tweeting for him. And he's talking about all he's doing to bring down gas prices. And he's blaming those evil capitalist oil and gas companies for just driving their profits up and overcharging the American people. And by God, it's going to stop now because he is doing everything possible to bring those prices down. You know what? I go, well, actually, excuse me, Mr. Presidente, actually, you're not. You can't just yell at people and tell them bring prices down and say, y'all are being unfair. No, 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 that's not the way it works. And see, now we are importing oils. We were a net exporter of oil and natural gas and all of these wonderful fossil fuels that the Lord God gave us so that we could burn. And now we're just complicating the simple. It really is simple. We need more refineries. We need more pipelines. We need more oil and natural gas being produced in the greatest country that God has ever laid upon us, and that is the United States of America. But yet, we're not doing that, are we? We have an administration that has basically declared a war on fossil fuels. Well, that's not really the way to get the prices down. It really is simple, right? We need more nuclear reactors. We need more nuclear energy. We do need more solar energy. We need all kinds of energy. I say put it all in the mix and let's see who comes out to the top. So even our government, y'all, I don't care if you're socialist, Marxist, communist, capitalist, whatever you are, every government complicates the simple because it really is simple, right? It's simple to kind of keep your energy costs low. If you got ample supplies of energy, use it, right? It just is simple. So let's don't complicate the simple. So now I'm not going to jump on Ed. I'm not going to make fun of Ed yesterday, but I was talking to Ed yesterday when he was on the way to get his flu shot. And Ed was like, man, his head was spinning. He said, Bobby, I could sell calls. I could do call spreads. I can do call debit spreads. And Ed, he's just going crazy. I mean, he's just going nuts all over the all the stuff that he could do, right? And the first thing that I'm thinking about is Ed is complicating the simple. So then some of y'all are like, hey, you know what? We could do what we're doing now. We could do it in natural gas. We could do it in crude oil. We could do it in wheat, corn, and soybeans. We could do it in the euro. We could do it in the British pound. Yeah, you could. But keep in mind that at the end of the day, I don't care what you do, but just don't complicate the simple. So we have a few metrics that we follow. Follow the metrics. Follow the metrics. Now, if you don't like my metrics, go with your own. Develop your metrics and then follow it. And if it doesn't work, abandon it or recalculate your metrics. I've got some pretty good metrics that we've developed. I have given you the reasoning behind those metrics. So it is our job not to complicate the simple. Don't be the federal government, whether it's Republican, Democrat, whip, libertarian, I don't care, Sagittarian. Don't complicate the simple. It's really simple. Everything is simple. Don't complicate. So this is where we went and said, listen, it's going to be a tough concept for y'all to go, but don't manage your trades. Stop managing trades because this will wear you out. This will kill you. Being a trade manager, Bobby, I got positions on and 50 underlines. Bless your heart. How in the world can you keep up with all that stuff and be managing those trades? So take trades and put it at a higher level and manage the portfolio. How do we manage portfolio? For option sellers, we use theta, we use delta, and we use our buying power. Now, I contend that with these three little things, theta, delta, and buying power, you should be able to control billions of dollars of assets, or you should be able to control $1,000 account, right? With these little things here, if you'll just manage your theta, delta, and buying power, you should be able to manage your portfolio. So let this be your guide. Well, Bobby, I'm trading 50 different underlines. Forget the underlines. Convert that into theta, delta, and buying power, and now control your portfolio. So 99.9% of the people out there manage trades. They're trade managers. Oh, a trade went against me. Oh, it doesn't matter. What did your portfolio say? What does your portfolio say? So for those of you that are out there going, okay, let's trade gold and let's trade this and let's trade silver and let's trade, whatever. Okay. But to manage the portfolio, we're still going to have to translate those deltas to SPY beta weighted deltas. Well, you don't got to, Bobby. No, you ain't got to, but then how are we going to know, how are we going to compare apples to apples? So if you're going to convert all these different assets and underlyings to SPY anyway, well, why not just trade S&P 500? That's what I say. You know, no need to trade silver and gold and everything bold in order to get your account percolate. Now, if you want to, just because you're a nerd, you know, you're a degenerate that has to be in everything, well, be in everything. But then remember, convert your deltas to SPY beta weighted deltas, manage your theta, manage your buying power, and run your portfolio. Everybody good? Everybody fine? Anybody mad? Because I'm slapping you in the face a little bit. I'm slapping you just a little bit. Now, I'm talking to myself too. I'm not just talking to you. Bobby, don't complicate the simple. Don't complicate it. I do it often. I have done it more than y'all. I'm a complicator of the simpler. Don't complicator the simpler. Just leave it simple. Simple, simple, simple. All right, Bill's good. Ed's good. Now everybody's fine. There you go. Just keep it simple, baby, and enjoy the fruits of your labor. No need for you to be jumping off and chasing the next shiny thing, because y'all won't. I know how you are. I need to close the 111 room in Trader Nerds Discord, because ain't nobody in there talking about nothing anymore. You know why? Because we jumped on to something else. Oh, I lost $300. I gotta go. Okay. Where you going to? Oh, I'm gonna go chase the next shiniest thing. I'm gonna go into commodities, or I'm gonna go into this and that. I'm raising my hand. So I'm getting on to y'all, yes. But for those of y'all that have stayed here, it's like preaching to the choir. Y'all are the choir. Y'all hadn't left. Ain't nobody here left. Y'all still hanging in there. Everybody else in the mama done gave up on it. Because I had a trade go against me 300%. Oh, I didn't know what to do. Okay, what was your portfolio screaming, baby? Come on now. Come on. All right, the market is up 1.86%. It was over 2% a while ago. I hate to say that I'm a soothsayer, but what did I say? What did I say yesterday? I said, this looks bullish to me. Looks like we're going to go up. Looks like we're going to fill these gaps, which now we have. We're going up to value area high. Here we are. Did I not say that? Now, I said we could hang out here. Now, it doesn't mean that we're not going to go down tomorrow, but I anticipate, just looking at this, I mean, I got a feeling that there's a little bitty magnet right up here going 3885, my man. 3885. I just feel it. Doesn't mean we're not going to come back to our point of control, fill these gaps, but I'm just feeling 3885. We shall see. Don't know when it'll happen, but we'll see. So AD is 394. Oh, behave. That's really strong. Let's look really quick at our linear regression, which has not been telling me much of anything of late. And I don't really see anything here other than we might go to the 3885. What is that at? 3885 here. When do I think it could happen? Well, let's see. 3885 by, how about here? How about the 8th of November? How about that? Or before? That's what I'm looking at. So we'll see. Now that'll be, we got the midterm elections. God, I know some of y'all are like, Bobby, I ain't putting on any positions till that dang midterms is settled. Till we know if them Republicans come back in or them Democrats gonna take over. And I'll just tell you, it don't matter. It don't matter. The whole lot of them, they're gonna spend all the money they can and tell you everything they can to get you to vote for them. That's what they're doing. It doesn't really matter who's in control. Doesn't matter what the markets think is in control. Baby, they don't got no bearing on me and you trading a little S&P going up and down. Because I can tell you one thing, all of them are pro 500 businesses in the US of A. Don't you let Nancy Pelosi convince you that she's a socialist, that she's full-blown socialist, wanting the government to take over. Don't you let her fool you. Don't you let her fool you. She's as capitalistic as anybody in our group. That gal will, and her husband will put money on stuff in the SP. Don't you worry about them. They're going to be fine. Don't worry about Nancy. If we knock Nancy out, she's going to be fine. She's a capitalist, Lord. She is a bloodthirsty, sucking capitalist. Okay. So y'all don't be worried about, oh, Bobby, I got to stay short. Forget it. Forget it. Don't even worry about that. Forget about the news. It doesn't affect us at all. All right. With that being said, let's just look at our accounts, shall we? Now we've been doing 3. So I know it takes a little bit of time. So let's see how we're doing today, shall we? So today is 21st, the day that I have to make my credit card payment, pay off everything Beth is. I don't blame it on Beth, but she does have a tendency. And I can talk about it because she ain't here right now. So this account is at 360849. 36,008.49, baby. Well, you know where we're going. What happened to moving up some? Here we go.
Well, we're moving on now. Moving on up to the side. To a deluxe apartment in the sky.
Yeah, so here we go. So our deltas are, let me put it back into privacy mode. So y'all can't see the account number. So my deltas are in a positive delta strategy. My deltas are -13. Bobby, how'd that happen? That's a good question, right? Wait a minute. We're selling puts and we're selling premium. You got negative deltas. Okay. That's what Ed found out the other day. He's like, I can't believe you got negative deltas or near no deltas. What the crap? My theta, oh, be still my heart. My theta is only a 48, but that's fine. I'm at 0.13%. Someone give me the VIX. What's the VIX? VIX. I got it. Hold on. VIX is at 29.92. Would you call it 30? Would you call it 29? I'm going to be consistent. I'm going to call it 29. I ain't even going to round that puppy. So I can be as high as 0.3%, and we can go 35% on our buying power. My buying power usage is, oh, be still my heart. Oh, 93.61. So it says I'm using 26. I could be 35. Okay, now, in making my decision today, right? What should I do? Let's see. My deltas are here. My thetas are here. I could be here. So that's good. My buying power is here, 26%. I could be here. My deltas are -13. I could be here. Okay. So if I'm just managing from a higher level, I could look at this and say, you know what? I could put on a trade today. Because my thetas are low, my buying power is fine. I could do a whole trade today. All right, but first let's do something. The only thing that we do have to look at with our trades, though, let's just look over here at this old account that is just churning away, is I need to look at my positions because we got some issues here. So if I look at my positions, now that shouldn't say 1 day. These are 0 days. That should say 0, right? Everything's in the money. See, they're red even. These are yellow. These are red. I think that must mean, hey, oh, behave. You got to get out of these things, right? Now, if both of these expire in the money, they cancel each other out. But we believe that Tasty Works will charge us assignment and exercise fees. So we want to get out of them as possible. So the most that I can make on these in the money spreads are $50, right? 50. So let's see. Close position. It's marketed at 50. I doubt there's a way on earth I will get filled at 50. Right? I'll put it in there. So we're going to have to work the order some. So there's always going to be slippage. You're never going to get filled for the 50. So let's see if we get filled at 49.75. And we're out. Everybody see how easy that was? Let's go back to my positions. I have one more in the money option. Now, again, the days are wrong here. I know that they expire today. These both are 0 day options now. They are fully in the money. 38.60, 38.10, close position. It marks at 50. We'll put it at 49.75 to get out. And we are out. That's the only management I got to do, y'all. There's nothing else to do. I don't have to look and say, oh, Bobby, what's this crap in the money? I don't have to group them. I don't have to see if something's down 800% because it is my portfolio metrics that are speaking to me. And my metrics are actually saying in this account, you know, Bob, you could take extra. Now, a couple things I could do. Some of you want permissions and we have rules, right? So the permissions are this, the rule would, the permission would say, okay, what could I do? Well, if I want more theta, I could put a trade on today, right? It's particularly with my outlook through November the 8th being a little bit bullish. So if I want to increase my theta, I certainly could, right? So I closed those, let's say my theta is now still 48 since I closed those trades, right? 48, my deltas are -12. I could certainly put on another trade. Now, it depends on how much you want to push it. So pushing it would be, man, I'm going to do everything I can to get my theta up here at 0.3, and I'm gonna use me some buying power. Now, if you're scared to death and you think that, Nancy and all the old Democrats are going to be kicked out of office, then you're saying, man, that scares me because we know how they are. I don't know what'll happen if you put those evil Republicans back in. So I'm not sure what'll happen. So then you go, well, I'm a little nervous. Well, keep it low, baby. Keep it above the 0.3. But if you want to take risks, take risks. This is up to you. How much money are you wanting to make? How much risk are you willing to take? If I want to take additional risk, this account is screaming, yes, Bobby, you can take additional risk. Is it the best day to take that risk? No. Now, what's this great permission? You ready? So if you're saying, I don't know, man, as long as I got my theta above 0.1, which is our minimum threshold, on a great up day, I could do what today? I could buy a put debit spread. Why would you buy a put debit spread? Because you can get them closer to the money, you get them cheaper, you get one that's closer to the money cheaper than you could on a down day. It's a great day to buy a put debit spread. And you say, well, I can always put in a naked put or two on the next down day. Do you see the freedom, the flexibility that you and I now have in portfolio management when you're simply going by the Greeks? So I don't have to follow you. I can put on a trade as much as I want to because I got plenty buying power. I got plenty of deltas. I got, you could say, man, I'm going to do it if for no other reason to get my deltas positive, right? To help move that positive. Look at me. But if you look at this account, y'all, you will see something that is gorgeous. And let's just show you really neat. Right, here's where we'll go to the old analysis tab. We'll go to the analysis tab and you see that old Bobby here has created a profit mountain. Oh my gosh, look at that. Way down under the 3,500 area at about the 3,448. Look at that. It's just this humongous mountain of profit just waiting for old Bob to come in and just let the market. Well, I want the market to go down. Now, I don't want it to go down fast because my theoretical line is right here, right? My mountain is only at expiration of my options, right? So everybody sees my expiration, my big, humongous mountain here. So this is what we call a beautiful, gorgeous account that's performing awesome well. Questions on that account, and I still haven't made up my mind if I'm put on trade deal. I want to look at everything else first. I want to see my other accounts, see how they're doing. Questions, comments. Come on, baby, hand it back to me. I ain't scared of you. Look, I'm married to Beth. I am afraid of no person. Y'all come on. Oh, look, I fixed this. Do y'all want me to show y'all how to fix this in yours? Because I'm not releasing an update until maybe next year. Do y'all want to know how to do the blue in it? Who needs that? Speak now, forever hold your peace. I'm gonna go right past it. Okay. So let's go to our IRA. Let's go to the IRA, see how we're doing here today. 10, 21, 22. And the old IRA. Let's see how it is. Recognize me. I have so much trouble with my stupid iPhone. Short Apple, y'all, because I can't recognize me since I shaved. I was going to start shaving every day, but I hadn't got I need a shower. What is it? A shower mirror? Because I want to start doing it while I'm in the shower. I think that's going to be cool. All right, y'all. So we are at 103,397.7D. We are moving on up, baby. We are up 127.
To the side, to a deluxe apartment in the sky.
Let's go see our Greeks and ratios for this account. So Bobby. So here we'll go to activities and positions. All right, 20.87. 20.87. 91.17. 20.87, 91.17. 20.87. 20.87, 91.17. So, VIX at, I'm gonna say 29. Look at this, y'all. I'm Mr. Cool. I'm Mr. Freeze. I'm not taking enough risk. Oh, Bobby, you loser, you 19724. What are you gonna do? I'll tell you what I'm gonna do. I'm gonna take some more risk. 19,274. Why? Because my account is screaming for risk. I could be as high as 207 in Delta. I need to have at least 0.1. I don't even have that. And it's screaming for a trade. I'm going down 10, 0.9, 0.8, back to 0.9. I gotta put on a trade. And y'all, I don't know if y'all saw, I posted it yesterday after our live session together. Remember, I sold 4 naked puts in this account yesterday. Well, after you and I got finished, that was when the market was up. Market then went down another like percent. It was down 1% for the day. I sold 4 more naked puts, and I still can't get this account built up. So what am I going to do? I'm going to do me a trade, baby. That's what I'm going to do. Let's go to Tasty Work account, and let's put in a trade. Table. Where we're going? We're going where we always go. Oh my God, here we go. All right, so we're gonna go to this 59, which is actually like 50. I don't know what's up with this stupid account. I need to log out and come back in. So long put vertical. Everybody with me? We're gonna do it 50 points wide. Right? And we're gonna get that down before we sell him or buy him for $10. Way on down here. Look at this, y'all. Look at us moving the stripes thing. So that is 1075. Move him on down a little bit more. There's 10. Now, if I go more, let's see, 34.50, 30. That's 975. But see, I don't want to overlap these stripes. And I even don't want to overlap here. So let's go back up one. 34.60, 34.10. Let's do that. 10. So I'm probably going to have to pay 10.25 to get that on. Right? Fill. So I decided, I suppose, that I'm putting a trade on in here anyway. So let's do 112 based on these market movements that we've had. The market. So we're wanting to get something around $10, but we're a little bit on the greedy side. So we'd like to pay for our commission. So let's sell 2 of these. 2 of these. Right? So 2 of those. Let's move it up to mid price, 1050, 1075. Let's see if we can get 11 for 2 of those. And bingo. I said, and bingo. Gonna make me go for 1075, aren't you? Aren't you? And we are filled. Now my deltas are -9. My theta is 52. Do you see how I'm not really taking any more risk? I mean, look, it's about the same as it was. And I just sold 2 naked puts. Isn't that cool? Still building our little curve to the downside. Go back to the analysis cap. Where we at? Position. Where's my line? Where's all my? Oh, here we go. There's our beautiful, beautiful little. Did it mess with Profit Mountain much? No. We just put another put debit spread out here to build Profit Mountain even more, didn't we? All right. So let's do the same trade over here. But remember, I got to start taking some risk. Got to. I don't have a choice. Bobby, what if the market? What if this? What if, I don't know. I got no idea if it's going up or down. So let's go put on some risk over in this account. So here we go. Bobby Beth account. We'll go to trade tab. I said we'll go to the, we don't want ES, do we? No. Let's go get us some MESs. So we'll go 56 days and the 2,900. We're going to sell 2 of those. What I got filled out over there? 1075. Let's see if we can get 11 of them. See if we can get 11. Come on, baby. Hit me. Hit me. All right, here we go. Plays. 1075. That should fix. Boom, 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 boom. All right. 1075. So we sold those. Now, I don't really even have to do a put debit spread, right? I don't have to. I just kind of like doing it. I kind of like putting them all together. So let's go do the 3460, 3410. 3460. Uh-oh. I already got a position over here in this one. So let's do the, let's try the 3340, 3290. See what that means. 32.90. That's 33. That's 50, and that's not enough. So let's move them up here. Let's do 33. What was it? 34. Oh, wait a minute, I'm on the wrong thing. 34.60. Here we go. 34.60, 34.10. Sorry, y'all. The old eyes start to go. 34.10. There we go, baby. Let's see if we can get. I just did one of those other ones then. We'll just do them one tranche. Yeah. Just do them one tranche. Just doing one tranche. Probably should do two tranches. You're gonna take some risk, Bob. Let's pay 10 1/4 to get filled. And we're filled. Okay. So why don't we do this? It's 56 days. Now, in this account, I am recording the trades, but remember, if you want to stop grouping trades, you don't have to group no trades no more. There's nothing for you to group if you don't want to. But I'm going to group them because I think it's still beneficial for y'all to see, kind of what's going on here with all the different trades. So let's go over here. We got filled for 10.75 on the nakeds and 10.25 on the spread. 10.75 on the nakeds. Right, here we go. So I'm gonna put this in the NP and threat. Y'all go, I ain't got this thing. Then all you got to do is become a Muscadine Mafia member, and you will have this today. It is in the Muscadine Mafia member, and then you can just cancel Muscadine Mafia, and you can just, I guess keep the spreadsheet. You got to keep going. Okay, so I'm gonna call this naked put 10, right? And we did the 2900s puts naked 56, 10, 21, 22. And what did I say? 10.75. We got filled for that, so we got a credit of $104.56. Then we did the spread. And the one tranche of that, or one contract of that. So this is PDS 10 at the 34.60, 34.10 puts debit spread 56, 2, and I think we paid 10 1/4. All right. So what I would then do is say, let's color them, baby. Let's let the world and us know that these go happy together. All right, so those two trades go together. Isn't that cool? We know they're kind of managed together. So let's go to NP10 and PDS10, group them in. So, did I not? Oh, I know, I didn't do the one that I did yesterday. Did I even record it? That's the thing. So let's go 2 of the 2900s. That's NP10. Move to group, add a group, NP10. Y'all hang with me. NP10. I hate when I have to go back and correct my stuff. And then 34.60, 34.10, right, is PDS10. PDS10. All right, beautiful. So these are the 33.80, 33.30, 28.50. Let's see. 33.80, 33.30. 28.50. Yeah, okay. So those are NP9 and PDS9. Okay. So there's where I see. Remember, these are the trades. This little purple color, that's the ones I went in and did after our session yesterday when the market was down. So I'll call them NP9. They could put 9. Oh, I always worry about somebody watching our little video for the very first time and think, what do they think? What in the crap is this? What have I stumbled upon? Move to group. Oh no, am I out of groups? Will it not let me do another group? Oh, please, hold on. Let me see. If that's the case, let me make sure if there's anything I take off. I'll worry with this later. I don't know. Bore y'all with that. Now I'm thinking I have to take off a trade just because I don't want to deal with it. All right, let me see if there's any that I can take it. No. All right, so let's go back through kind of old school management. Some of y'all are doing this. Y'all would go, oh my gosh, I've made 274%. $146. Let's take this off with 10 days to go. And now new management says, why would you take it off? You don't have enough theta. Why would you take off 5 of your thetas here? Why? There's no need to do that. And you go, God, Bobby, I got to trade up 100%, 95%, 80%. Bobby, you've got a trade that is up 400%. You maniac, you're making $225. Why would you not take it off? Well, because it gives me theta $10.20. Why would I take it off? Bobby, what are you? 339%. Hello, ladies. Farrah Fawcett has just called you and said, hey, big fella, come on up. And you're just ignoring it? Yeah, I can say it. Yeah, I can say it. Well, you say, Bobby, what about all that risk you're taking? Remember how we did this yesterday? So hide simulations, all groups. What this? I'm in 4 different series of expirations. The ones that expire in 10 days look like this. Here's what it is. What's the market at? 37.44 right here. Here's current price. In 11 days, I'll be up another $200. If I go down here, so I'm up 600 now. If I go to 900, if I go down 5% in the market, y'all, and hold on 11 days, I'll be up $1,023. Y'all see how great this is? Assuming you're at max BPE, would you compare theta on an existing trade to a new trade to decide to enter a new trade? Assuming if I'm at max buying power, right? That's what you're talking about, Dwayne. Would you compare theta on an existing trade to a new trade to decide to enter a new trade? Max, if I am at the maximum buying power, right? So if I'm at max buying power, I can't put on any more trades. So I would be closing a trade. Now, I wouldn't look at it again till the next day. That's what I would do. So if I'm at max buying power, I'm not putting on a new trade.
Bobby, can I ask you a question there?
Come on, Ed.
So I have a couple of 112s that are in ES that are marking like almost $1,000 of profit.
Uh-huh.
And normally I'd take that
You
off.
greedy
I don't know.
capitalist.
Yeah. So I'm looking at that, and if my buying power were restricted and I had a position that, like, let's say the naked puts were at low, like 2 or 3, which is kind of where these are, could I not have the option to take off those naked puts and maybe the whole thing and put on
Absolutely.
a further, in other words, take that buying power off, take that profit because there's not a lot left. Like these aren't even in the profit tent. I mean, we're a couple hundred points above, but there's time left. So they're marking small little profits on the put debit spread. But most of the profit is in the naked puts. So I'm wondering, would that be an instance where my buying power is being used up, but it's being used up for very little purpose on that individual tranche? Does that make sense?
Mm-hmm. Mm-hmm.
So if there's not a lot of money left to make there, would I not be better off if my buying power were restricted, or I was so inclined to take that position off and put a new one on with fresh theta, fresh everything? Or the other thing I've been debating this morning is, and into the, like, do I want to close these 2 naked puts and sell one higher up against it? I'm still 30 something days out on these trades. So
yeah, you can take the profits from existing puts, and you can, if your delta and theta and all that are low enough, right? You can certainly roll your put up based on these market movements the last, day or so, and collect more premium, thus increasing your theta. Whatever you can do to increase your theta, I would totally be for it. If your theta is low and your buying power is low, whatever you can do.
Okay, good. And I'm clear on that. It's this, if things are elevated, this would unelevate.
Yeah.
I guess it'd be better to take a position off and then wait for a pullback because everything's still elevated versus just putting another one on and leaving our metrics
elevated. If something's elevated, what do? Take a position off, right? Or put a position on, or a combination of both. Get somewhere that you get comfortable. Take enough positions off to get you back in line. And don't worry about, oh man, I don't want to take off a losing position. I got to take off a winner. No. That's how a trader trades. not a portfolio manager. Take off something that will get your Greeks and ratios back in line. Where do you want to do that? Well, we
And
talked
that's why
about
I was
yesterday.
considering taking off these two naked puts, putting on a single higher naked put underneath the put debit spread, bringing in about 5 to 7 more points, lowering my buying power because I'm now in one naked put versus two on that position. I'm just
Yeah,
wondering
now-
if is it
now-
worth lowering my buying power and raising my theta by doing that move?
Now, you and I are probably going to differ here a little bit, Ed. Here's kind of my plan now, right? As I'm thinking out loud with it. You know, I'm probably, unless I'm dealing with, if I've isolated a trade and now I've become instead of a portfolio manager, I'm a trade manager. Unless I've isolated a trade to fix, I'm going to fix things in the closest expiration. And any new trades that I put on will be in the farthest expiration. That just keeps it simple for me.
Would be what? Repeat that, please.
Okay, so I'm
Anything you
going
put
to,
on? Yeah,
anything that I'm going to do to fix my metrics, my first glance fix comes from the nearest expiration. So if I'm going to take something off in order to fix my Greeks and metrics, I will take something off from the nearest expiration, the one that is about to expire. If there's nothing that I can fix in that expiration, I will go out to the next expiration. And so forth and so on until I fix it. So then if I'm putting on new positions, so you were talking about putting something on in that existing position to take something off. To me, that's just complicating the simple. Where do my new positions go? My new positions go closest to 60 days without going over. So if I'm going to try to fix something by putting a new trade on, I'm going to go out and I'm going to put it on where I normally would put new trades. I'm not going to worry about marrying it to a particular put debit spread that I've already taken something off, blah, blah, blah. To me, that complicates it. Let's keep it simple. My management is I'm going to manage from the closest expiration that's about to expire. And if I'm putting new trades on, I'm going to put new trades on way in the back where I normally do. It's simple. Ed, don't worry about, I would say, do what you want to. I would say, don't worry about putting things back in places where you took stuff off. You don't worry about that. Just put them on where you normally put them on.
so you're saying take the two naked puts off and put on a higher single naked put if I want to.
Out at
Which
60
it-
days or 45 or
that?
whatever, wherever you normally put your opening trade.
So if this is a 28 day I'm taking off, just go ahead and maybe layer in. You're saying sell one naked put, say in the 50 something DTE,
Yeah,
just the naked put because I can handle it?
Yeah.
Interesting. Okay.
isn't that cool? Anybody disagree with me? That's fine if y'all disagree. That's fine because you gotta make it your own plan, right? Remember, we had a great discussion yesterday. Was it in our Muscadine Mafia session where we were like, well, we can take off the one that's closest to the money or the one that's farthest in the money or however you want to do it. The one that's got the most deltas, however, whatever you come up with. I would just say be consistent. So I really, at the end of the day, don't think it's just that I don't want to now be in the game of going, oh, if I took off for 28, I got to put back on the 28. Screw that. That's trade management. Let's go to portfolio management. Let's go put our puts safely at 60 days. I think they're safer at 60 than they are at 3 days or 15 days or 28 days. Right? You collect more premium on them. I think they're safer out 60 days. That's just where my comfort level is. You got to figure out where your comfort level is here. Well, this is some awesome stuff, though. I just hope y'all are I'm just so excited. I'm just so excited. So remember, your series here shows you different expirations. This is my expirations in 10 days. Am I comfortable with that risk? Well, heck to the yeah, we could crash 5% and I'm good. Bobby, what if we crash 12? Well, that's another story then. But I'll let the Greeks be my guide. Right now, the Greeks are telling me, hey, Bob, you don't got no problem. All right, let's look at the second expiration out. Look at that. Look at that profit mountain that just continues to build. Anything that needs managing in that expiration? I don't think so. Let's go to the next one. Look at old profit mountain out there at 3,000. I like him. Let's go to my final expiration. Look at there, y'all. And we look at them all together. Ta-da. I got a break even on this first expiration. It's down what? 7, 8, 9, probably 10% down. 10% down move. I like it. Yeah, see how we can rev up risk without necessarily, looking at a lot of things. Isn't that cool? All right, let's go to the other account. Let's go to the other account. Let's see how she's doing. So I put on a trade, but it looks like I've maxed out in my, let's see, it looks like I've maxed out in my groups. It looks like they only let me get so many groups, right? Because if I click that move to group, and it won't let me put a group on. So what am I going to do? I guess I won't do anything. I guess I just leave them like that. Because here's where we want to get to the place, I think, is rather than looking at individual trades up 300 and 400%, I think we want to get to the place where we're just doing this, taking the groups off, and just listing them by expiration, right? So here's my 10 days. I ain't even looking at 28 days. I mean, I'm looking at my 10-day options. Anything to do here? I don't think so. Yeah, there they are. Now, if a naked put gets at 100%, oh yeah, take that off, right? Take that risk off. But I don't see any, that's a spread, isn't it? Yeah, that's a plus. So I don't see anything really to have to take off. Isn't that gorgeous? All right, next account. Crimson account. Here we go, baby. Let's see how she's doing today. How you doing? So here we are in ten, 21, 22, 26, 731, 43, and y'all know what that means.
Well, we're moving on now to the side, to a deluxe apartment in the sky.
All right, 7 and 33.92. 7 and 33.92. 7, 33.92. And the VIX we said was 29, right at 30. And our buying pair is buying pair 59.2. All right, so here again, using 22%, can use 35. Look at these deltas. Y'all have started to notice, and here's what we're going to notice as we let those put debit spreads go into the end. They become monsters. They become deadly. Look at this. We just have changed our portfolio management, and look what's happening in my deltas. Isn't that great? They just keep going down because I got these nice little put debit spreads. All right, so our theta is at the lower end. We could be at 0.3 using 22% buying power. Y'all. Well, first of all, let me see if I got anything expiring in this account today, because you want to check every Friday, right? You want to check, by your days, look at by your days. You want to make sure you don't have anything expiring today, and I don't. So there's nothing that I really got to do here. So this is screaming for me to take another, put another trade. You're down toward the bottom. You could be 0.3. Anyone disagree with that? All right, so let's put on our trades. Let's go back to the other account. And let's do the same little trades. Now and create duplicate order for 1025 and confirm and send. Let's see if it still goes 1025. 10, yeah, probably be 1025. 1025, confirm and send, put it in the right account, which will be the Crimson account, and send. Failed. Go back to the other account. Let's go get our naked puts. Great duplicate order. See if they're still going for 1075. Oh no. Try it. Confirm and send. Put it in the right account. Nothing. Jacks. Make a list of credit here. That's fine.
Did you want both of those in the Crimson account?
Yes. Yeah, I want these in the crimson account.
Oh, that's the naked points. Okay, I'm sorry.
Let me get that in crimson. Come on, Phil, me. There we go. We got Phil for 1050, so quarter off. Isn't this cool? See, because y'all never seen an entire portfolio up 81%, right? You've never seen an entire portfolio up 97%. Because I know what y'all are saying. Oh my God, I've got to take this off. But I'm saying that if we're going to hold our portfolio metrics, there's nothing screaming for us to take it off. So the beauty of the 111 and the 112 that I discovered accidentally, that Stacy had discovered a long time ago and told us about, and I wouldn't listen for some reason, and that others have discovered, is this trade is better taken to expiration. How about that? So we may, y'all.
Say that again. You spoke so lowly.
Okay,
I didn't hear what you said.
Kim, what we found out is this is a trade that works best taken to expiration as long as your portfolio metrics justify.
Okay, yeah, that's correct.
And I was slow to the party, and others have already figured it out. And I'm just slow, y'all. I am slow.
Mhm.
So
You also mentioned Stacy said a certain DTE was good.
I don't remember if she said a certain DTE was good. Now,
Well,
I can see us taking off. I mean, I could look, I know some of y'all, like if we look at this account, right, we got 10 days. I could see somebody going, Bobby, you got 80% out of those. But then I would say, hey, I'm getting 5 deltas on it, and my deltas are toward the lower end. This is what I'm using to make my decision of leaving this on. I don't want to lose that 5 delta that I got on these things that I'm, and again, go to your nearest expiration. Let's go to the other account. Let's go to the Crimson account again, because we didn't look at this, right? So let's go over here, Analyze tab. Let's go Hide Simulation. So let's go to our nearest expiration in this account. Here's the nearest expiration. Look at that, y'all. Is that not gorgeous? So I'm sitting here going, this is the 10-day expiration. If we get a 5% pull back in the market, that doesn't do anything to us in 10 days. I mean, we're barely in the profit 10. Look at this. Yeah, it got bigger there. Isn't that cool? I mean, why would you take it off? Okay, let's look at the metrics of it. Let's see what this is giving us. What is the trade giving us? It's giving us 475 in theta. Why would I take 475 in theta and take that trade off? I want this theta. Market goes down, I get more theta. Just don't see, we did evaluate some of these things and we go, hey man, if they start tossing out negative theta, yeah, maybe you take them off. So let's look at our next expiration now. November. I mean, look at these trades, y'all. Look at our melt ton that has the potential. Here's 5% down. Here's 12% down, y'all, and we're at maximum profit. 12% down. Oh my gosh. All right, let's go to our next expression now. Look at this. 12% down is not even our maximum profit. 12% down is not even our maximum profit on the trade. This thing still goes up. Let's go to our final expiration out in December. We're not finished yet, right? We're not finished building him yet. He's still building. Let's go to that third expiration one more time in November. And look at that, y'all. Look at that. Here's 12% down. Here's 20% down. Market goes 20% down. You really don't care because you're going to be at $1,200 at the end of that expiration. Oh my gosh. Y'all see why I can't sleep at night? Ed can't sleep at night. Ed's having so much trouble. He almost wrecked on the way to get his flu shot at the Kroger yesterday. Ed almost run off the road. He was so excited. And y'all don't believe this. Ed's wife was throwing out. She was taught. She said debit spread. She said naked put, and she said theta, delta, and gamma. I heard her say all them words yesterday. And I'm sitting there going, "You think Ed and his wife ain't doing a little role play in the middle of the night, huh? Little theta, delta, gamma. You think they ain't got their little frat party going on, huh?" I mean, we some excited people, y'all. And we're at an age you don't even get excited anymore.
Hey, Bobby,
Yeah,
can I extend your meeting a little bit here?
yeah, go ahead.
So you want to share let me share my screen. Can I do that?
Sure. Let me stop sharing.
I have my positions up, and this is, we kind of just went over this, but I really want you to look at it and everyone else to look at it and help me reach a conclusion here. So hold on.
Let me make it where you can share.
Yep.
Okay.
Okay.
I think about all those poor people that quit the 111 because they had 300% losers. That just breaks my heart. I don't know if we want to get them back or not, but I think we need to scream, "Hey guys, I think y'all missing something here."
All right. I can't tell am I sharing right now?
Yep, I see your Thinkorswim screen. We all see.
All right. So you see the cursor. Okay. So here my positions sorted by mark.
Mhm.
Okay. So
Ed, you guys explain to us what mark is. We don't even know what that is.
well, mark is the current price of this particular strike. So this 2,600, this is part of a 112.
Mhm.
Yeah, let's see when I put this stinker on October 7th.
Mhm.
All right, put it on for 530. It's worth $1.40. What I'm getting at is, like, I could take this off for 280, and then I can go sell. Now, this is the 28-day expiration. But because we're portfolio managing, I hear what you're saying by, well, just if you want to take that off, and I'm thinking I'll leave the put debit spread on. And
Yeah,
I'll
because
go.
I think we have found out we want to build a whole darn village of those things, right?
Yeah.
Those put
So-
debit spreads are what allows us to sell naked puts
Yep.
with some
And
downside.
that's why I'm saying,
protection.
if I leave my 28-day put debit spread on,
Mhm.
and I go out to, say, this December 56-day expiration. So I take those off, say for $2.80 total.
Now, first of all, let me ask you a question. Why are you taking those off? Well, that's the question.
Because-
Why-
because-
what's-
All right. So here, I'll do that. Let me show you what I'm looking at.
Yeah.
All right. It is.
Ed,
Is
if
it
I had
this
to
one?
read all your little notes on here, I'd want to run off the road on my way to Target.
Okay, so here's the whole position. Let's go look at it in the Analyze tab, I guess, since you're making me do it.
Ed, you still haven't answered my question. Why are you wanting to take that off?
Well, because I want to show you.
Okay.
First, the naked, my theta, because my theta is getting low. And these are two naked puts 28 days from now that only have $1.40 left to make on them.
So you're going to replace the risk somewhere else.
Yeah, that's why I want to take off the two positions. What am I doing here? Something must not be clicked.
You're an ES here. Is that an ES trade?
It is.
Okay.
I don't know why it's showing $17 out here to the right. I don't get that at all. Oh, you know why? No, I don't know why. I was going to say because it's a badass, but it's not. Oh, yeah, it is. It's a badass 112. This is the wrong trade. Hang on, folks. Maybe that's part of my problem. I'm looking at two different trades here. And when I unsort it, that looks like something I should go take off. All right, watch. Or don't watch. Okay. So here are these trades right here. This one and this one. This one's up 970 bucks and this one's up 700. Okay, they're both in the 28-day expiration. It looks like I put them on in September, like September 20th and September 21st. Is that possible? No. Oof. I'm looking sloppy here, people. Anyway, it doesn't really matter. The point is, these two trades, they're up. Like these two naked puts, they aren't even the ones. Oh boy. All right, maybe I've just wasted everyone's time. I
No, no,
apologize.
no. I would just say this, Ed. Look, I think you're getting in the weeds here. I just think you're getting in the weeds. If your theta's getting low, go put on some more shorts. Don't take these off. If you're
Okay,
at
well,
95%, if you're at 95% winner, that's fine. I see that. Go put some more on if your theta's low. What's your portfolio metrics? What do they say?
They're getting low.
Yeah. So why would you take off something that, you know, that's still giving you theta?
Well,
just to
I guess
replace it
when
with
I'm
something
looking
else?
at
I think
each
you're
of the-
overthinking it. Put something else out for 60 days.
Yeah, that wouldn't be unusual for me.
Yeah, I think you're complicating the simple.
Okay, so
Now, I'm
this,
not saying that it's wrong. I'm just saying, Ed, that would drive me crazy to have to go through the analysis that you just had to go through later. Your
well,
overall
it
your
doesn't drive
overall
me
portfolio-
crazy.
Your
This is
overall
part,
portfolio is telling you to take additional risk, not take off risk.
it is. And that's why I'm looking, when I unsort by group and I get back to this page, and I'm looking at these two with only $1.40 left, I'm thinking, even though these are 2600s, why do I need to leave this on? This is getting to the point where, like, I'd rather take this off and put one naked put on in the 3100 strike and capture 10 or 11 points.
And I cannot fault you for saying that. If you want to do that, take him off. Take him off, but replace that risk and then put on some more.
Oh, I would definitely replace it. I wouldn't wait for a pullback in this case. This is more like
Yeah, I
I'm shuffling
got you.
these two out and I'm shuffling a new one in and bringing in more premium.
Right, and I wouldn't even put it in the 28 days. I got no problem with you taking off something that you say, hey, I've got a lot on, take it off, and then go out 60 days and replace the risk. Don't put it back in the 28 days. That's what I would do. Just because I do it though, don't mean y'all got it.
Okay.
Oh, did you bring me a candy bar? That's a fun food. Baby Ruth. Thank the Lord Jesus. Hey, little Red. All right, everybody good? Y'all feel good? This awesome? Hey, that's right. It's okay to take off risk, but because you've got such low risk, make sure that you replenish it and then some. Replenish and then some. Great session, y'all. Y'all be good. Hey, Ed, hold on for a second, okay?